Hello, my name is Clive Cochrane, and thank you for visiting my YouTube channel, The Cochrane Codex, where the focus is on explaining rather perhaps sometimes complex ideas in the world of global finance. What I want to look at in this video relates to the foreign exchange market, the global FX market. And I'm going to talk about a very recently published survey which is published every 3 years by the Bank for International Settlement, BIS, and an affiliate of that organization is the Basel Committee, which provides essentially the ground rules for the global banking industry. So as you can see, this is a triennial survey, so it's published every 3 years. And the most recent survey was published just a couple of weeks ago, back in September of 25. And what happens is the BIS conducts a very comprehensive survey of activities in the global foreign exchange market. So, as you can see here, the headline really is that turnover, or volume in effect, in the global FX market has come very close to reaching $10 trillion per day. That's a staggering amount. Volume makes it the most liquid and most actively traded of all the world's financial markets. Say by comparison, the US Treasury market, which is also a very liquid market, the daily volume is estimated at something like $1 trillion per day. Now, let's just have a quick look at what we see here. On the left panel here, this shows you, in fact, over the 3-year periods that I've just mentioned, going all the way back to 2004, you can see there's been a steady and quite significant increase in volume or trading volume on a daily basis. In 2025, the actual number is around $9.6 trillion. And the prior survey showed this at 7.5 trillion as of the 22 survey. So there's been a steady increase. Now, what they also show on this diagram is the breakdown of trading in the different formats that you can trade foreign exchange. So, for example, we have here the spot market. Now, the spot market essentially is where say maybe two banks, who are, by the way, the biggest traders on a day-to-day basis in the FX market. Let's say two banks decide to trade one currency against the other, euro against dollar or whatever, and the trade essentially happens in real time at the price that's currently on the screen, known as the spot price, and these trades are typically settled very quickly. The blue part of the pie here, or in the 25 over here, is what's called the forward market, the outright forwards market. This essentially is when two banks agree. It doesn't have to be two banks, it might well be a company, and it is trying to then lock in an exchange rate in the future, but it can do that today. So let's say I'm a company here in the UK and I have to buy something significant in a year's time that's going to cost me, I don't know, $50 million. And I want to hedge myself against an adverse exchange rate move where I might need more pounds to buy the $50 million, say, in a year's time than today. What I can do is I can call my bank, and my bank can then lock in a rate of exchange known as the forward rate. And then in 1 year's time, I can execute my trade to buy the $50 million at the rate that was agreed today. So as you can see, this has actually expanded somewhat in between 25 and 22. This accounts now for 19% of the total volume. The spot market is 31%. So right there, you have 1/2 of all the daily volume or turnover in FX accounted for by both spot market and forward market. Now, this yellow part of the pie here is for the swap market, FX swaps. Now, FX swaps are somewhat interesting, take a while to explain. I will actually explain them in another video on my YouTube channel. And these do not, for example, involve any interim payments. They're typically an exchange of currencies at the beginning of the agreement, the swap agreement, and then an exchange back at the end of the agreement. In one case, it's based on the spot rate, and in the other case, it's based, or for at least one currency, is based on the forward rate. So that has also contracted significantly, actually, down from 51% in 22 to 42% in 25. Now we can see another type of swap. Now these are more complex swaps. Once again, I will cover those in a video on my YouTube channel. And we can see here rather small amount. Well, back in 22 it was 4% for FX options and various other structured FX products. That has actually expanded to about 7% of the total as of 2025. And one other quite interesting chart from that survey or document is what we can see on the screen here. So basically what this shows is the turnover by currency pairs. By far the US dollar is the most traded of all world currencies. Not surprising considering that the dollar is the world's reserve currency. Now you can see the difference between the blue bar here, which is the 22 survey. This is the more recent survey, the 25 survey. The euro, in fact, has declined marginally from close to 30% here to a little bit below. You can see the Japanese yen here. And this is what is known as emerging market economy currencies. There's a basket of currencies here. You can see them actually listed down here on the diagram. Now, when we look down, and the scale obviously is now reduced, and you can see the British pound here, which has declined from 13% in the 22 survey to 10% in 25. The Chinese currency, the yuan or the renminbi, has increased a little further beyond where it was in 22. And then I'll just quickly read these. This is the Swiss franc, the Australian dollar, Canadian dollar, Hong Kong dollar, Singapore dollar, the Indian rupee. This is the South Korean won, the Swedish krona, the Mexican peso, the New Zealand dollar, sometimes called the kiwi, the Norwegian krona, the Taiwan dollar, the Brazilian real. This is the Polish currency, the zloty, and this is the South African rand. And you can see that the most actively traded pair is euro against dollar. The BIS have quoted this the other way around, but in the actual forex market it would be euro against dollar. So that is the most traded pair at about 21%. Dollar yen, dollar pound, and again you can see them all broken down over here. I won't go any further down the list. Now there are a few other interesting statistics that emerged from the BIS survey. It turns out that foreign exchange trading is quite concentrated. 80% of all forex trading takes place in 4 locations. The biggest one by far is actually the United Kingdom, and obviously that would be typically London banks, not just UK banks, but global banks operating in London. And together that accounts for about close to 40% of the total volume each day. The next largest territory is North America, which would be primarily the United States, and most of that trading would be happening in New York. And then you have smaller amounts of trading taking place, say, in Singapore, Hong Kong, and Tokyo. As I mentioned, if you are keen to understand more about the foreign exchange markets, I will be covering those in videos that I'm creating for my YouTube channel. So I hope that you will come back and visit again and learn more about, say, for example, what is, say, an FX swap, how do FX forwards work, and so on. Well, I hope very much that you found that discussion to be of value and useful and interesting. And could I once again remind you to subscribe to my channel, the Corcoran Codex. It will allow you to receive notifications as to when I add new material, which I do on a regular basis. All of the material is around this general topic of analyzing critical ideas and episodes in the world of global finance. Might I also just take this opportunity to mention 2 books that I have written over the years, both published by Wiley, and you can see them there. Thank you very much for watching.